Welcome to another episode of Profit Insights with your host, Dusty. Here, we break down the latest financial trends and market movements so you can stay ahead of the curve. So grab a cup of coffee, sit back, and let's dive into the world of finance. Let's kick things off with the impressive surge in U.S. equities on June 27th. All three major indices hit fresh highs. The S&P 500 led the charge, rallying 0.5% to close above its February record, while the Nasdaq Composite climbed 0.6% and the Dow Jones rose a significant 1.0%. This robust performance came despite news that President Trump plans to terminate trade talks with Canada. Investors seemed unfazed, focusing instead on better-than-expected corporate earnings and a promising new trade framework with China. In the semiconductor sector, Micron Technology turned heads with stronger-than-forecast quarterly revenue, thanks largely to rising AI chip demand. This news boosted other chipmakers like Marvell Technology, AMD, and NVIDIA, with NVIDIA briefly setting a new intraday high. However, it wasn't all smooth sailing. ASML Holdings took a hit, falling over 11% after cautioning that its recovery would be more gradual than previously thought, impacting others like Broadcom and Micron. Healthcare insurers also had a moment in the spotlight. The Biden administration's proposed reimbursement rate increases for Medicare Advantage plans sent stocks like United Health Group up 3.9%, with CVS Health and Humana both gaining around 7%. This bolstered the S&P 500 healthcare sector by 1.27%. On the macroeconomic front, the Fed's preferred inflation measure, a key data point, rose 2.7% year-over-year in May, stirring questions about future rate cuts. Meanwhile, durable goods orders unexpectedly surged, hinting at strong business investments despite looming tariff concerns. Yet, consumer spending showed signs of slowing, signaling that the Fed might hold off on easing rates until inflation pressures become clearer. Policy developments added another layer of intrigue. The Fed is considering easing capital requirements for banks, potentially boosting Treasury market participation. Meanwhile, U.S. and EU officials are discussing trade deals that could ease rare earth and digital service restrictions, even as Trump threatens new tariffs on Canadian goods. As we look ahead, investors are entering the second half of 2025 with an eye on U.S. political dynamics and Fed policies. Many are pivoting towards safe havens like gold amidst geopolitical uncertainties. Additionally, M&A activity is strong, fueled by optimism over future tax policies. Upcoming U.S. employment reports and consumer price data, along with Trump's proposed fiscal policies, are set to shape the S&P 500's trajectory, which has already risen more than 4% this year. Over the weekend, financial analysts turned their focus to the June 30th jobs report, the next Beige Book release, and the early July tariff schedule. Investors are eagerly awaiting corporate guidance for the second quarter earnings season to measure how tariffs and rising costs might impact profit margins. Before we wrap up, here's an investment tip. Stay informed about macroeconomic indicators like inflation and employment reports. They're often key drivers of market sentiment. And always keep an eye on sector-specific news, especially in tech and healthcare, as they can offer unique opportunities for growth. Thank you for tuning in to Profit Insights. I'm Dusty, reminding you that when the dust settles, only the truth remains. Till next time, stay informed and invest wisely.